Hey everyone, this is Heather and this is going to be a second tutorial on the Trady Flow tool. I did another tutorial a while back when the Trady Flow tool was not a separate tool in itself. It was combined in the options market dashboard, but then we analyzed the performance of the tool and realized that it was actually working quite well, so we had to create a separate tool for it. And you can go to the tool by going to the sidebar and clicking here. And so let's just start sort of discussing what the tool is and how to best choose it. So basically, Trady Flow actually looks at repeat options contracts and sort of just signals you whenever there is a lot of orders, there is a lot of flow for a particular options contract. And the reason we have to do that is because when you're trying to analyze live options flow, if you go to the live options flow tool, you'll see that there is just too much data for us to analyze. We can see there are like 28,000 entries today in the live options flow tool. So when you're trying to analyze the flow of different stocks, there is just too much data, and sometimes you feel overwhelmed. If you are a professional or if you are an expert, then probably you can do it, but for many new users or for many retail traders, it's just hard. So we wanted to see if there was a way to sort of remove all the noise and filter out some good contracts or filter out some really good flow out of these 28,000, let's say, flow entries today. And that's where the Trady Flow tool was that's where the Trady Flow tool originated from. So again, it looks at repeat options contracts, and we have a bunch of filters. If you just look at repeat options contracts, you get so many signals a day because we have like 28,000 entries. So we have a bunch of sort of our custom filters that we apply on the back end to only give you like 30 to 40 signals a day. And with filtering, you can just filter that down to 3 or 4 signals. Those are the really good signals, and we'll talk about them today. But that's the idea. It's not just simple repeat flow. There is a lot of filtering going on. There is a lot of sort of noise removal going on the back end, and that's sort of the secret sauce that we have that makes this tool so effective. But hopefully you get the basic idea. It's again intelligent repeat options flow contract, intelligent extraction of repeat options flow contract. So let's sort of start going through what the tool has. So on the top we have these weekly top signals, and these signals are based on the total number of orders. So let's go to the live options flow tool again just to explain what the total number of orders is. So each row here is one order. So for example, for this AMD trade, it was a call, it was at bid for strike 130 expiration this, and then the volume or the size of that particular trade was 140. But this was one order. Although the volume or the size of this trade was 140, we consider it as a single order, and we want a lot of these orders for the same contract to actually sort of start our analysis for Trady Flow. So now that you know what an order is, let's just go back to the tool. So the more orders we are getting, obviously the more confident that we are that people are expecting a directional move towards the strike of those options contracts. So for each of these weekly top signals, what you see is you have this price chart, and then we have a horizontal line. The horizontal line is the strike price of the contract that is being signaled. So this is a put contract, and we are expecting the price to actually reach 35 by January 2022. And that's what sort of the signal means. And $1.3 million were spent on it, and those $1.3 million were sort of separated into 24 individual orders. Then we have Google, we have Snap, and we have a bunch of others. You can see that on Snap we had 15 orders, but the premiums were a lot higher. About $5 million were spent on this 60 Snap call, expecting the price to, let's say, go to 60 from about 54 right now by January 2022. And so these get updated about every hour or so. Whenever new signals come in, if they have, let's say, a new signal comes in and it has total orders greater than 24, it will sort of get to the top, and then these others will just shift right. And when any of these signals go in the money, or when any of these signals actually hit their horizontal line, so this needs to hit the line below, this needs to go up, and because it's a call, it's a put. And so whenever that happens, that signal or that contract becomes in the money, the target has been hit. So we suggest that you exit the trade, you take your profits, and that's just it. And we remove that signal from this list when that happens. Alright, so these are the top signals, but what other information do we have? And this is the main table that you need to be looking at every day if you want to sort of get high signal contracts. Just a quick side note, if you don't want to sort of keep this tool open all day, or if you don't want to look at every single signal, then you can actually enable these sound alerts. So as long as you have the tool open, whenever a new signal comes in, that let's say you have a few filters, short term, 1 million plus premiums. Whenever a new signal comes in that has a short term expiration date and 1 million plus premiums, you are going to get a sound alert. As long as you have this enabled, you're going to get a sound alert that is going to tell you that a new signal has just come in with these following details. All right, so we can see that for each signal we have the time, symbol, the contract details, then the total number of orders, the total volume for those 6 orders, the total premiums, the open interest, how much is the difference between the stock and the strike. So the stock right now is, let's say for the signal, 455.3, and we are expecting it to move to 456. So that's a very small percentage difference. And then this is the implied volatility, and this actually tells you whether the contract has actually hit the target. So we had plug and Facebook today, both have hit their target, but this one hasn't. And then this, I'm going to come back to this in a minute. This is very useful. So the first, again, these are, let's see, we have all of these signals are from today. So these are about, I believe, 40 to 45 signals in a day. And obviously you can't, most of you cannot look at 45 signals a day and spend a lot of time doing your own due diligence with those signals. So what you have is a set of really good filters that you can use to filter down the list and then choose from there. What I'm going to do today is just go over 1 or 2 filters that are sort of the most powerful ones, and then since these are pretty self-explanatory, you can go over the rest on your own. So the first one I'm going to go through is the consistent winners one. This, if you just hover over this question mark icon, you can see that these are the symbols whose historical hit rate is more than 50%. So this is your first criteria, and usually as long as the contract is, as long as the signal doesn't have 25 plus orders, this is the first filter that I choose, but I'll explain why I don't do anything if the contract has 25 plus orders. So this is the first one that you can choose. It's a good one, and it'll give you a good list of signals that you can then sort of do additional DD to find sort of the good ones from the bad ones. I'll mention something again, a side note, the tool has about 60 to 70% historical hit rate. So even if you just pick something random, there is a 60%, there is at least a 60% chance that it is going to hit the stock is going to hit the strike rate by the expiration date. But there is a very important point, and we found this during our analysis of historical signals and how they have panned out. It is a must thing that whenever you are going into any of these signals, so this signal is for December 17, you have to add at least 2 to 4 weeks of extra time in your expiration. So if this signal was for December 17, you have to get a contract. You can get the same contract, or you can get a contract that has the same strike. Yeah, you have to, I believe you have to get the same contract, the same strike, but the expiration has to be 1 month extra out. Or you can simply, if since we are expecting that the price is going to 456 here, you can actually get a 460 contract as well, because that will be a little bit cheaper, and you can just exit when it reaches 456, because even then you'll have some profits in your contract. But you must add some extra time in all of your Trady Flow signals if you want to really get good returns. Now, why does that happen? That's important to know. Otherwise, like, it doesn't make sense. If the signal or the repeat flow is coming for a particular contract, then why do I have to add extra time? That's an excellent question, and there is a very good answer. So whenever these sort of massive repeat orders are coming in, that's mostly smart people that are accumulating or building up a position. And let's say they are expecting the price to go to, let's say for Facebook, let's say they are expecting the price to go to 330 in the next 4 days. Today is October 25th. What if the price doesn't sort of end up going to 330? What they're going to do is they're going to take a small loss on their existing contracts, and instead of closing them, they're simply going to roll their contracts into the next week or the week after that. So they'll close out all these contracts. They've spent $5 million. They're smart enough to know that they shouldn't they shouldn't lose all their money. So what they're going to do is, let's say this is not panning out and this is not working out, they're going to take a small loss, let's say about 200 300k. They're going to put that money or roll that contract to a later date for the same strike, because they're expecting the stock to go towards that strike. So you see, as a retail trader, you are never going to know that these smart people have rolled their contracts, and then you might lose a lot of money. So your contracts will expire worthless, but these smart people that we are trying to follow actually just roll their contracts to a farther out expiration. So just to sort of remove all that complexity, a simple sort of rule that you can follow is always add at least 2 to 4 weeks into the contracts that you buy from Trady Flow. Now that we know what to do with their expiration dates, one, and we know that consistent winners is a decent filter. Two other filters that are really good are the 1 million plus premiums and the 25 plus orders. Let's talk about the 1 million plus premiums. This just means that a lot of money has been spent on a single contract. But the most important thing apart from adding extra time is that since this tool, the hypothesis is that the more number of orders there are, the better the better the chance that the stock will actually end up going to the strike price. We want a large number of orders. 6, 7, 5 is just not enough. Even if there were 10 million premiums on this contract, I would suggest, if you have other reasons to believe that SPY is going to go up or Facebook is going to go up, then this is just additional confluence for you, and that this is just telling you that 7 people, let's just say these were 7 different people, were confident enough that they spent in aggregate $5 million on Facebook calls, expecting the price to go from 328 to 330. So that's good confluence. That sort of that's a good sign for you if you're trying to go buy calls for next week for Facebook. But if you ever see these anything above 25 or above 20 or even above 15, then that means that this is a large group of people that have the same mentality, and they have a lot of money, so they are probably very smart as well. So when you have this large group of smart people putting in a lot of money into a contract, then historically speaking, and please remember this is probably going to be the title of the video as well, historically those contracts have a hit rate of more than 80%. And being very frank, we have all these tools and the platform is based on AI. This is the first tool that has a filter that has a sort of long-term historical accuracy of above 80%. We did some analysis over the last 4 to 6 months, and whenever you see a 25 plus order, there is a very high chance that that order, as long as you are adding 2 to 3 weeks of extra expiration just to be safe, there is a very high chance that that order is going to end up going toward the stock price is going to end up going towards the strike. So let's see if that's true. So what I'm going to do here, we have the 25 plus orders. I'm also going to select the short term because the longer term signals still need time to pan out. And let's just see how many of these actually sort of ended up hitting the target. So Facebook hit the target today during sort of after hours because it was earnings today. Facebook moved up quite a lot. Then Tesla actually came, I believe, 4 days ago, and it came at 896, and the strike was 900, and again 28 orders. Today it actually went above $1,000. So that was just massive profits. Then we had Coin 293 to 300. Then again Facebook 329 to 335. It made the move last week. Then we had Tesla. So this was a good one. The signal was put out at 857 when the stock price was 857, and the signal was saying that the stock price is going to reach 900. So you can probably buy 900 calls, and those would increase in value. If you hadn't added some extra time in your expiration, you would have some profits, but they wouldn't be enough because I believe it only barely reached 900 by the expiration date. But if you followed the rule and added 2 to 4 extra weeks, then it has only been about 5 to 7 days since this signal. And although this one has expired, the idea remains the same. We are expecting the price to go from 857 to 900. Maybe it will take 2 or 3 extra weeks. And from 857, we actually the stock price actually ended up about 1,020 at the close today. So that's a $170 move that's given to you by the Trady Flow tool. Here again, obviously this was a small one, it panned out immediately. Then we have AFRM, TIF. You can see all of these. So 1, 2, 3, 4, 5, 6, and it just keeps going. And there are very few signals that have not hit the target, which is why I say that the historical accuracy is about 80%. And you can see that out of, I believe these are 17 signals, only two have not hit. And you can see the zeros. Like this is a live video, and I'm just scrolling, and you can see there are very few zeros, which means almost all of these 50 contracts that we have just pulled up, more than 80% of them hit their target. Some hit their target before they expired, some after 2 or 3 weeks. So it's just very safe to add 2 to 4 extra weeks if you want to have the maximum profits. And so I hope sort of you understand the reasoning behind trying to go with this 25 plus orders. This is the single filter in the entire platform that we have that actually has a consistent long-term hit rate of more than 80%. Most of the other tools sort of are somewhere between 60 to 70%. So now that we have this single filter that we want to use, obviously there are all these other filters that you can use. Since these signals don't come very often, you can actually sort of remove that filter, just sort based on the number of orders, and then go from there. You can also use other filters. But I hope sort of you had a good idea on what the tool does. One important thing that I want to mention in the end is how do we dig deep into these contracts to understand when the smart money that we have been talking about for a few minutes, when does that smart money enter and exit these contracts. So for that, let's just go to these 25 plus orders again, and I'm going to do short term again. All right, so these are the orders you have. So for that, let's just click on this plus icon. So this icon actually takes you to a dashboard, and that dashboard is going to give you more details about the contract and a few statistics about how the smart money is dealing with that contract. So again, this is the target. This is where the price is. In sort of post market, the price actually did reach 340, which is why you can see that this is in the money now. And you can use different charts here just to get an idea of how the price is going. But this is not that useful. So this signal came in the morning, and we had earnings, so we recommended that not many people go in unless they were very confident. You only go in if you want to YOLO some money, because earnings are always hard to predict well with flow. But the signal came early morning, and by the time the market ended today, even before the earnings came out, the contract had gone up about 50% already. So this is just one day. You're not doing any additional due diligence, which I always recommend that you do in order to further improve the probability of your plays. You're not doing any additional due diligence, and you're still up 50% if you entered when the contract came in. But this is just to show off. Now this is sort of the more important thing. So this table actually shows you the flow for that particular contract in the last few days. And the side is just based on the fact that whether the order was filled on the bid. If it was filled on the bid, then most of the times it is a sold position. Sometimes it is still a bought position, but we have to sort of approximate. And if it is filled on ask or above ask, then most of the times it is a buy position. So we use that information to figure out whether we call it a buy or sell order. And so what we want to do here, let's just you can see that there was a lot of buying going on, but obviously some people were selling these contracts as well, because they might be expecting that the price will drop tomorrow, so that they were selling these calls, and they wanted to collect premiums. But you can see that huge premiums, buy orders, huge premiums. You can see the sold premiums are very small. So that's a good sign. When you're going through this table and looking at the individual flow for the contract, you want these sold positions to be very small and these bought positions to be very big. And then you can see again that the bought positions are much higher than the sold positions. What you want to sort of see here is that these, look at this, clean, tons of bought positions. So what you want to see here is you don't want to see large premiums spent on the sold side of these sort of orders. So let's just sort this by premium spent. You can see that the top 4 orders today, since this is October 25th, were bought orders, which means that the smart money that went into these contracts, some of it probably exited. Let's say if this person entered at 10:34, maybe they exited partially at 11:22. But the sum of these the sum of sort of the top bought orders should remain greater than the sum of these sold positions. So for this contract, let's just say, and this chart actually shows that, so we don't even need to sort of dig deep into this. So this chart shows that the bought premiums today were significantly higher than the sold premiums for this particular contract, which means that the smart money that went in when the contract came in, or when the signal came in from the Trady Flow, that smart money is probably still there in the contract. If this green bar stayed constant and this red bar continued to increase, that would have meant that the smart money that put in all that, the smart people that put in all that money into the contract, they have just exited their contract. And I'll show you an example of this. So a snap order came in. So this was a good one, 12 orders. Let's just go to the dashboard. And this had 12 orders and 5 million sort of premium. So this seemed like a good one, but you can see that, so this is where the signal came in. You can see that it has not been doing well. The highest it went was 10%. And a lot of smart people were buying these contracts. on sort of Friday. But as soon as the market opened today and sort of throughout the day, a lot of these people sold their contracts here. So about $4.8 million in premium and about $3 million in premium have been sold today, which means that about 60% of those people that probably went in here just sold with some loss today because they are not expecting the price to actually go towards 60 anymore. So that's again, this chart is just very important. Not many people understand it and not many people use it. But if you keep seeing these green bars higher than the red bars, then that means that there is just more accumulation and the smart money that went in is not selling. They trust in their play, they trust that the stock price is probably going to hit the strike price. Our play is going to be hopefully good as well. So probably we can stay in the play for a little longer than we normally would. But if the smart one is exiting and you see these huge red bars, then that's a sign that no matter how good the play was, since we are trying to imitate smart people, we should probably get out as well. So hopefully that helps sort of finding out where money is being spent and how it's going in and out. This is a trick that not many people know, and this dashboard actually helps you do that. So that's it for the Trady Flow video. One or two things that I'd mentioned in the end is you should always sort of do some kind of due diligence when going with these signals. So if you just blindly enter these 25 plus order signals, you'll still have an 80% accuracy rate, and that has stayed consistent for a while now. But if you can add some additional due diligence on top, then that's just an icing on the cake. And I'd always recommend that. Just sort of build a habit of doing at least 2 to 5 minutes of due diligence before you enter a position. You'll see massive differences in your trading. So let's see, we want to see whether there was a resistance level that we just crossed or whether there is a support level that we are falling on to right now. We can do that. We have these support and resistance levels. We have trend lines. We have a lot of stuff for you that you can use. We have these anchored VWAPs. These are really awesome. I'll create a video on them later on. We have projections. We have technical analysis. We have a lot of stuff for you to do more analysis before going into a play, and I'd highly recommend you do that. If you can do some of the things that we have mentioned in the video, then I'm fairly certain that you'll find a lot of success from the Trady Flow tool. Again, being very frank and honest, I want our tools to be as good as they can, but this 25 plus orders filter is the only filter that at least till now has an accuracy of above 80%. Hopefully by the time you're watching this video, or hopefully later on, many of our other tools will probably reach the 80% mark as well, which is an amazing mark in trading, and it's extremely hard to achieve it because I've been developing these systems for over 3 years now. So please sort of start using Trady Flow, start making plays out of it. You can use other filters, but always spend maybe 3 to 5 minutes into a play, because this is your money and you shouldn't be spending it or gambling it away on plays based on some other tool. So sort of manage your risk, use the tool, and hopefully you will find amazing results. Thank you so much for watching this video. I hope this is helpful.